So, everyone, aren't we all excited that I get to fill in for Jamie Hodge in office hours? What a treat for all of us. Steve, you especially, because you don't get to, do webinars with me, I know, as often as you would like.
Let me unmute myself and I can answer that. Yeah, something new and exciting. And
as I look at a younger Einstein, I almost say, like, is he a family member of mine? There's a little bit of, one of my people.
Is he Russian?
Yeah. All right, so before we get started, let's everyone know, please, that Trade Ideas is not a registered investment advisor. And before we open our eyes to some incredible things that you've never seen before anywhere else on the planet of trading, understand that the information that you're going to get is for educational and informational purposes only, and Trade Ideas is not a registered investment advisor. If you would like registered investment advice, please seek that from a licensed professional, not a Trade Ideas employee. All right, Steve?
Yes?
We're going to have some fun today. Because I'm not Jamie, and Dan and Jamie have known each other for so long, I said to myself, I don't want to bore you with Jamie kind of crap. Because, listen, I've heard it before. And Jamie can defend himself right now, Steve, because he's in the air. So this is a perfect opportunity for me to give it a completely different spin. Okay? I'm not going to talk about the spiders. You know what the spiders are doing? They're doing whatever the hell they do. They're going up. The market is rigged, everyone. You all know that, right? But it's rigged to go up for the most part unless, unforeseen things break out. World War III, all sorts of crazy stuff that happens, Trump election, etc. Unless unforeseen stuff happens, in general, the market is rigged to go up, which is a good thing for everyone's 401k and mood in general. So if you know that, then you kind of understand the very, very basics. And I'm only bringing this up because a lot of times people forget the basics. Remember, all that money that we put into our 401ks and when we pay our medical insurance, those insurance companies put that money to work, and a lot of it does end up going into the stock market, managed by like 5 or 6 guys. I think they're all in the cabinet. But that's not what we're going to be talking about today. What we're going to be talking about is...
We're going to talk about underfunded pension liabilities?
Oh, no. Like I said, that's all, that's all in the make-believe future that we don't know if that'll happen or not. But what we are going to talk about is behavioral analysis. And one of the things that I want to bring up, Steve, okay, is this stock, BCRX. Okay? And what I want to do here is I want to discuss something that most investors don't really understand. That if you ever remember listening to some of the Warren Buffett-isms, he said buy when there's blood on the street. Now, obviously, what Warren Buffett can do with blood and his ability to withstand price swings is different from all of us. But he is talking about the concept of bargain hunting. One of the best bargain huntings kind of scenarios exists when some news breaks. And again, this part of the news, Steve, that can happen after earnings. Like in this case, it's probably some drug results. Yeah. And what happens is you have this huge gap down, and it's like, oh, we are in panic mode. But while humans process all this emotionally, let's talk about some things that are happening. All of a sudden, a price gets clocked. Okay, here it is. $1.66, I believe. Okay? This thing, from this candle to here, there's an immense amount of panic. But then what starts to happen, let me move this back. Let me expand it a little more and move it back some more. Hold on. I'm adjusting it so that we all can see. So as soon as this happens, right, somebody starts to take advantage of what's going on. And pretty much from this day on, so 1, 2, 3, 4, 5, on the 6th day after this gigantic move, BCRX basically was able to clock in its low and continued higher pretty much from then on. From then on out. Sorry about my terrible charting stuff, but
Charting skills.
yeah, my charting, I can't. But it's kind of, but look at it, right? Because one of the things that I'm trying to show is, so here it clocks in the low right here, and pretty much from February to December, it has continued to go up. Now, what I want to talk today, Steve, is about the psychology of how would you ever been able to be in a move like this and not panic your ass out of it, number one. Number two, be able to take advantage of it in some way, shape, or form. So what I want to discuss is position sizing as it relates to this. Also, I want to discuss the fact that this is something that investors should be hunting for. Because what happens here with this kind of gap and this follow through, and it doesn't happen all the time, but what you're seeing is this is alpha and this is supply and demand mispricing. In other words, supply and demand is not always perfect. At that point, the rubber band got stretched too far, and it's been stretching back ever since. And this could be resistance, by the way, because this is where the bad news happened before. A lot of interesting, stuff that you can think about. But what I want to kind of bring up is the fact that position sizing and little things like that have a huge amount to do with whether you are or are not able to
Let
stay
me just jump in there. The trade of the week, which is usually dictated by myself after we curate it over the weekend and discuss it with all the guys. There's usually language in there that reminds people this is not the day trade scalp of the week. This is a position. And in a position, we need to size accordingly. And so you'll notice on those trade of the weeks, we're not looking for a 1 or 2 day move. We're looking for a longer term move, and you've got to give wiggle room. And so on a swing trade, longer term position trade time frame, Dan is exactly right. You've got to really have a liberal stop and size your position accordingly. And I'll take that a step further. Your stop should be a technical level that makes sense. For instance, Dan, if you were to highlight that daily chart, maybe going back 6 or 7 days, that little red and green blip down and back, exactly. Right there would probably be in a level below there technically, which makes sense to stop out of this trade. Now, if your point of pain in dollars is $400, and that level down there is $1,000, well, you need to reassess your positioning, because the market doesn't care that $400 is your point of pain. The market takes the price action to levels that make sense technically, and then runs the stops, and then support and resistance start to kick in. So it's a combination of position sizing, but also recognizing where your maximum point of pain dollar loss is. And that's how you can calculate, and you've got to find a level technically on that chart that makes sense. Again, the market doesn't care that at XYZ price you're out $400 and you're gone. No, it better make sense on the chart as to where your stop loss and your position sizing is the worst case possible, and that's risk management 101.
Absolutely. So let me talk a little bit about, Steve. So this one, again, I'm trying to, there's two concepts here. Number one, we're going to talk about these moves, like being able to find what, quote unquote, the bottom. And by the way, here's, Steve, what a lot of people kind of don't understand or misunderstand, at least. You have to be prepared in any of, look at this right here. I'm going to, again, I swear I know what I'm doing now. I think. Okay. So look at these moves, right? These gigantic candles. Not all of them, like not all of these bottoms make it. So the idea is you have to be prepared at every single point in time. Okay, if you're wrong, like over here, like for example, here, this thing went down. Look, it found a bottom right here, and it started to go up for quite a while. But look, this failure was a real failure. So the idea is that we don't know, but you have to be able to like play it accordingly. Like in essence, you could either decide to, I've been in it enough and I want to, take my profits. But you have to have a strategy for all of these cases because we don't know which one will work out. You want to try to maximize these moves. But again, only through having that positioning game plan will you be able to actually be in them. So, a couple of things. So I have a top list window, Steve, called Alpha Predator Awakening. It's a one that, again, because Jamie's not here, I'm just going to do a couple of things that are different for you.
Sure.
I'm going to be talking about, I number one, want to remind people that, so I'm going to split this kind of into two tiers. Number one, I want to talk about a window, and here, Steve, I'm going to right-click, I'm going to say Save and Share to the Cloud, Alpha Predator Awakening, copy, and I'm going to paste this into the messages area of the chat so everybody who is a client has this. So what I'm going to talk about is the anatomy of some of the things that I see, supply and demand, and what I particularly look for an edge. So those of you who have been in our trading room and have been watching the market, you kind of understand the concept of float. Float is something that is it's almost a physics property because float dictates the inertia or how much the stock
Friction.
is going to go based on the demand. There's kind of like, you can almost put float in the momentum equation if you were going to make a physics rule out of it. So what I want to show you is, look at, so here's a trade that I am in, and I've talked about this trade for a while.
Which is also a trade of the week, by the way.
Oh, awesome. Yeah, Square. Let me show you guys. I am in this one at 12 something, like somewhere around here. And I got into it. Again, if you think about it, right, look at this move right here, this downward movement. The correction lasted longer, but then, the correction is proceeding. And then there's a final area right here. If it clears, it could really start running. And I want to explain a little bit about why. So number one, of course, Square, it's a different kind of animal in terms of float, although, quote unquote, just over 100 is still really not considered that big. I mean, if you compare that to something like Microsoft, which has a 7.69 billion float and is ripping the hell up, by the way, which is a very bullish sign for the overall market and technology. Okay, or something like Intel, which has a 4.7 billion float and also heading towards highs again. You will see that Square is a different type of animal. Like, Steve, if you and I were looking at this kind of from National Geographic point of view, right, you could say that Intel and Microsoft are lions and Square is your house cat. Would you say that's a good kind of metaphor? Size-wise.
Sure.
Yeah. They look, I mean, they hunt, they kill, but one's a lot smaller than the other. However, here's this interesting thing about Square, what you ought to be paying attention to that's often overlooked. Look at the short float.
Yep.
If this number is accurate, and by the way, data vendors are kind of crazy. This is not a number that Trade Ideas figures out on our own. We're dependent on people that publish this, but I'm pretty sure this one is accurate for Square. That means that there's a lot of people betting against this company for who knows what reason. That's really not relevant. But what is relevant is that you're kind of watching that since this time right here, since 11, Square has been moving up. And what that means is that people who are short are feeling pain. They don't like this because, they've sold this, quote unquote, here, but they have to buy it back, and they could start being forced to buy it back at all-time highs. When that happens, again, it creates a flood of momentum that typically pushes a stock and breaks it out. And look, in fact, here, Steve, if you squint, do you kind of see a smiley face right here? right? With the two I's, the D and the SQ, or am I just crazy? You see this is a nose, the comma?
Yep,
Maybe a
Mr.
ghost?
Rorschach.
Yeah, it's a little Rorschach. But guys, I mean, entertainment. So the short float is a key consideration of what could happen. Again, this lets you know that there are people who are hoping and praying that this thing goes down, but all it's been doing is going up. And remember how you are when you're losing money? Nobody's happy about that. Which brings me to our next candidate. Okay, so I'm looking at this one called Alpha Predator Awakening. I did that myself, Steve.
Before we leave, I'm sorry, I just have to do this. Where did you get into Square?
I got into Square like right around here, 1236-ish or 1219, like right around this area. I was just starting to go. And I didn't get into it all right away. I got into like 300 shares first, then added, then it broke out, and then it pulled back, and I bought a little more, and then it...
Well, the trade of the week email went out. It was 1162, so they got you beat.
No, yeah, no, you know, in fact, I think that might have been why I bought it, but I just didn't catch it in time. And by the way, that's another perfect example that this is not designed to be a race, you know, that you've got to, you know, roadrunner yourself, sprint through. We're trying to do this so that you can make money without, like, just being completely glued into the to the computer. So, Steve, let me bring up what I've been looking at, and I want to talk about float. So we just talked about Square, right? And notice we said 62%, and it has $186 million float. So remember, we were just making animal comparisons. So look at Stone Energy. Okay, Stone Energy, and I'm going to double click on it right here. Stone Energy is exhibiting all the kind of behavior that makes me want to drool, Steve. And you know how I am when I get drooly. Okay, so let's first of all pull our noses away from the chart and start seeing. This is the part of the stuff that I love, Steve, because what I say to myself is, look at the beautiful cleanliness. Your eyes do not need to be polluted by a bunch of lines. Everything that's happening is instantly visible. This thing has been declining since $99 in October of 2015. God dang, that's a long way to go from 99, which, by the way, is a quick reminder why buy and hold and just pray does not work. Because that's what people who are long here are doing right now. They are in prayer mode. Okay? Also, look at the various attempts. 1, 2, 3. This one looks so good, Steve. 4, 5. This one also looked good. Oh, 6, 7, 8. No! But here we go again. And let me explain why this is so interesting this time. Okay. So, Steve, notice what's happening here. I mean, this is kind of, look at the volume waves. Okay. Then if you're just, your eyes should be instantly fixated to whatever's happening here. Look at this, like, this is what you call the 2004 tsunami, right? I mean, in terms of volume, look at that wave that just came in. You with me?
Yeah.
Okay, so here's what I want to throw to you psychologically speaking. I mean, you can kind of tell that the majority of whatever the hell happened here was primarily happening on the long side, because look what was happening, right?
With volume.
I mean, clear, followed by a big sell-off. But look at the spike right here. Again, looks like the buyers are tipping their hands. I'm not saying it's pleasant for them. I'm just saying that that's what's happening. Now we're going to get into this whole thing with the election. Okay, because remember, this is where you do have to be a human and just be aware of what the hell is going on. Remember that nobody thought that what was going to happen, and we're going to get rid of oil, and so on and so forth, and now the CEO of Exxon is running the State Department. And, look, 4.4 million in the float.
Can I show you what the possibilities might be? Let's put up CWEI and look at those metrics, because I believe CWI also was a trade of the week back at $18 in April of 2016.
Yes.
Look at those metrics. Okay, so where are we? Short float, 33%.
It's a good thing we're doing this together, because I totally forgot about that. But it is one of our better ones. But it's the same concept.
The same thing. Low float means low friction. There's not very many shares in circulation. 10 million is nothing.
Nothing.
33% of them, 35% of those guys are short.
And
they haven't learned their lesson. They still haven't learned their lesson.
You know, look at this thing. It's being talked about on social media. I mean, this is the same kind of thing. Now, let's go to SGY just real quick. And look, if you think about it, right, the social media compared to CWEI, which is like a 200%, right? But it's about to like break out and go. And by the way, just want to say again, Steve, you and Holly, great work.
Mm-hmm.
But,
what do we do?
Well, CWEI.
Oh, yes.
So,
CW.
yes, Steve and Holly are married to each other on the trade of the week. They are dancing partners in the world of AI. Coitus? Is that why I like to say that? I don't even know what that means. Anyways, but back to you guys making money. So imagine SGY is exactly like CWI. There, I just said it, Steve.
You know the first thing I'd be doing, even though it's a long ways away?
That's what I'm looking for.
Yeah, put it on the radar and then set a price alert there at that big level at 25.
Yeah, so there's a couple of things that you need to do. So one of them is, let's go over here at 1526.
That's your first
So here's
level.
like how professionals would do it. It's exactly the opposite of everything that you do, and let me explain why. So, Steve, you know most people go to like casino and they play blackjack and they say something like this: "All right, the wife gave me $500.
Lose.
You are the wife. You be like, got my $500. Going into play." And they sit down at some table. Maybe it's a 25 hand table. And I've mentioned this in my webinars before, that they never gave themselves a chance because you couldn't kind of go through the paces of what you would have needed to go through to successfully invest. That goes back to what Steve and I were saying in the positioning. I can get into, let's say, 300 shares of SGY and kind of let it, I mean, I'm not going to let it go all the way back down to 4.
It's called getting it on the radar.
Yeah, but it's all right. Maybe even start with 100, you know. The idea, though, here's the thing. It could go in a way and never see a price again. That's what happens. Like, you look at this right here, 358. I'm pretty sure it might never see that price again. Of course, 3 days ago it was there. This is what's so exciting about the market. The reason you guys are here in this webinar, right, is because you need to be paying attention to this. This is what pays your career. Okay, when SGY turns into CWEI and you wrote it the same freaking way. But it's not going to make it super easy for you. But then again, look, if you were long here at 24, right? Let's say you bought 500 shares at even at 25. You could have held that 500 shares and never even flinched. Even over here, because at 25 you're like, God damn, pulled back pretty hard at 72 from 92, but shit, I'm in at 25, who cares?
Well, there is one way to make it a little bit easier and a little bit more simple, and if you could navigate back to editing our SGY trade, I wanted to remind you how important it is that we give ourselves notes, because this thing might pop up in a couple weeks and we forgot that this thing has a low float and a high short float. So in the notes column inside of our price alerts, it's very nice. I like to make a nice habit of it. I'm just kind of quickly reminding Dan here as well that it might not hurt to put the short float and the...
Yeah, I'll just set a new one.
Yeah, just set a new one. But I want to remind people, because what's happening here is this is Dan and Steve, and the market's closed, and we're in our unemotional state. We're in our, oh, that's interesting. That's a very Zen-like looking thing. I bet you it might do that, which is harder to do when the market is flashing and real money's on the line and things are going back and forth. So the more we can do with our current unemotional self to deliver the message to our future, probably a bit more manic self, as to why we really like this trade at the moment, by putting in those metrics of 10 million in the float and 35 million short, then when this alert pops up, it all comes clear to us and we remember, that's right, that's why I like this trade. And you might be surprised at how the confidence level jumps right back up to pull the trigger on something like that.
I mean, I literally say stuff like this to myself. Oh, Lou, it's not about that. It's what's going to happen. We don't know about how all of that's going to happen, and neither do you. But the point of the matter is that when a stock goes from $4 to $10, something is going on. And it is not for us, the investor or the wave rider, to speculate. You want to be in a position to take advantage. So again, see, Steve and I were making our notes at areas that, again, are saying that something is going on.
The footprints in the sand don't lie. Right. Analysts lie, CEOs lie, CTOs lie, CFOs lie, but the footprints in the sand don't lie. So what Dan's saying is yeah, there's a story there sometimes, but sometimes that story can really convolute our ability to see the bigger picture.
Exactly.
And price pays. Price is what pays.
Here's the other thing, and Lou, I do not want to offend you in any way, shape, or form, but in fact what you said is a very good example for everyone else. Listen, ladies and gentlemen, if you are looking through the financials of a company, that are out there on the SEC and Edgar, and you think you found something in the financials that the guys at Goldman haven't combed through, and they've got college students who are like the ones that did really well on their SATs and did really well on all their tests, the ones that got the 4.0, they're the ones who are like the intern analysts at Goldman. They're going through all of these numbers, and they already have the ratios that do and don't work. There's nothing that you could possibly know as it relates to that kind of information that could be meaningful to you, because that information is out there. But the behavior of what Steve and I are showing you, the way people perceive that, and the understanding of what happens when you have the physics of a small float mixed in with a large short float. I mean, you could be talking about a potential acquisition. We don't know. So that's why, again, you don't want to taint yourself by any of that. What you have to do is basically be prepared for a reversal, and which means that you would exit. You would not sit there and going, well, I'm in at 10 and I can hold it to 4. No, you don't need to do that. But again, it might not see 10. This kind of behavior is what we call, like Steve said, footprints of something unusual. So that's the lesson, and you want to look for that. So here I am. I'm kind of looking through some of these names in Alpha Predator Awakening, right? And I'm looking specifically for a similar type of thing, looking for a small float. And again, it doesn't have to necessarily be short. That's, by the way, Steve, the beauty of supply and demand, right? Look here. You just have a lot of demand. There's not a lot of short specifically, right? Very small short float. But they are doing something that somebody knows about, and it is moving this stock forward, because it's very possible, literally, that it's run out of sellers. That's another thing that people kind of sometimes forget. Like it goes through cycles. Things kind of, you eventually go through whatever you need to go through, and a new behavior takes shape. There were a lot of people selling from here to here, right? But look at this wave. It's like this wave was a shock wave, Steve, in February of 2016. And by the way, I mean, this is a stock that we were watching even then. This is why you want to be in the market, because in the market, unlike real estate and other places, this is where we hunt the alpha of these types of moves. The move from $2 to $7 is incredible. This is exactly why you are in this office hours webinar. I'm trying to get your eyes to see the kind of things that we're looking for, and I'm giving you the tool, the exact same tool that I'm using, and how I'm approaching it. Okay? So let's look through a couple of these other ones. Look at this. Notice. So just from human behavior, right? Steve, we talked about this. Oncology, you know what this is. These are the guys chasing cancer cures. I mean, it's amazing stuff. We don't know if it's going to work or not. But that is not for us. We are hoping that it will. You know, if one of them comes close, look what can happen. Right? And this is the kind of behavior, Steve, that you and I both know that we like, because what's happening is this kind of consolidated area and a relatively slower rise makes people comfortable. So it makes people less likely to panic out, which means that you should have this on the radar. And I would say, I mean, right here, let me put that at 85. Maybe 75 even. Oncology is a go.
You know, what are you going to pay more attention to? A couple of analyst poor recommendations, or the price action of the stock moving higher 5% after those recommendations?
Right. Well, also notice these gigantic, you can just visually see this without needing to be a rocket scientist. That's what I like. Look, there's like this right here, but it's still stable. That means, like, you know that story of Little Red Riding Hood? Eventually, in the brick house, the wolf can't blow it down. And this, again, just staying, and then boom, something happening. It went up quite a bit here, pulled back, but then just steadily. So here we are. That's I said at 275. I'm trying to, you know, so my goal with this office hours too is I want to kind of put stocks in front of you that you might not always be, you know, looking at, because. And Steve, tell me, what is, you know, I don't know what Jamie talks about. I don't listen to him. He's crazy. I mean, no. Jamie's very good. I'm just totally joking. He's in the air, and I don't always get to bust on him that often as CEO. So it's one of my pleasures at, you know, the webinar, and I want to entertain our audience at the same time. But I feel like this is not exactly how Jamie does it. Am I right?
Everybody has a different flavor. Andy does it different, I do it different, and that's why we created the cool Monday, Tuesday, Wednesday, Thursday webinar, where it's never the same two people, so you guys get a different flavor.
That's right. That's right. So, okay, to that end, let me add another top list. So I want to move this one. We kind of talked a little bit about the pattern. And I want to bring this one up. So this is called Trend Change Lubricant AI Scaffolding. I'm going to right-click. I'm going to save and share to the cloud, copy to everybody, and send it into the window. So make sure everybody has it. Okay. So here, this is kind of a similar type of thing that I'm looking at, where I am trying to find a stock where, behaviorally speaking, the trend could be getting ready to change. And again, I do this in a number of different ways. For me, Alpha Predator Awakening is a type of scenario, right? I'm saying waking up. Like CSRB is kind of like waking up. Stocks wake up at different price levels. You know, here's one. RECN, Steve. Again, it's the same thing. It's except for it's already kind of proven itself. In other words, this thing looks like it's doing something good, and I went all the way back. I mean, as far as we go, huge resistance here, huge resistance here. This thing is about to clear it. So you don't always have to find the bottoms, although, by the way, we hunt this kind of stuff where, see this? Look at that, Steve. See, people almost miss that visually, right? There was that huge panic sell, and then recovery, and then oh my God, how do we screw this up? And then look at that.
That's where it starts to get interesting again. The gap back up and the failure to close the gap and then moving back to highs.
Right, but now it's about to go. So I definitely think that, if you're interested in, I would say right above here, when it makes new all-time highs, new all-time should keep running. Again, because it's blue, we call this blue skies. It's cleared it. That means that it's proven itself. Somebody wants this. Okay? Let's move right along to go-go. Holy moly, have these guys been trying to do something. I mean, Steve, I can't tell you how many times these guys have killed me on Southwest. But who cares, right? We're not in the... I don't necessarily use their services, but what if... The theory is obviously, they're going to be the ones providing people with wireless... with Wi-Fi on your airplanes and
coach.
Yeah, and coach. They could at some point get it right. And one could say, from a behavioral point of view, what is this? This is like, I forget the candlestick name for it, but there's some name, right? Engulfing? Is that what that is, Steve?
That's very, very much engulfing.
Yeah. So this is engulfing, and what I'm going to say is I want to see it close like higher. So I'm going to make, and this is another comment, close above here, and I have no fear. By the way, these are the kind of little mnemonics that I do for myself to do exactly what Steve said, to make it clear to me that it's okay, and I knew the state of mind. And in fact, I mean, I could really go all the way and just clear this price level. That means if this is the case, right, then you're really looking to try to take this out right here. And if you zoom out, there's a much bigger game at play. So this is one of the things, Steve, that to me is the big problem for people who kind of write themselves into, I am a day trader. I trade you days. I'll trade you 2 Wednesdays for a Friday.
Hey, let's give them an example that might be an actionable one, and it does come off the trend change lubricant. It's not on yours, but it's on mine, and you saw me tweeting about it this weekend, is ZOES. And ZOES, if we take a look at the metrics...
Hold on, Steve. He's
getting ahead of you.
All right, there we go.
Okay, so first let's look at the metrics. Short float, 34%. The float of 19 million, that's under 20 million. Those are pretty interesting metrics. Now, when we want to look at the daily picture...
hold on. I also want to point out a couple of other things that I do. And remember, office hours to me, it's such a good opportunity to realize that you're not using some of the stuff that is out there in your face. So watch a couple of things, just because you were just saying it and I'm relating it. Number one, notice in this single stock window, right? This window, you can customize these things. So all of these things are kind of things that I have done for myself specifically. So a couple of things. Notice. Look at the options volume here. So unless you're watching that specifically, you might not know. But because I have this on my single stock window, right, I'm quick to like, I mean, again, I don't know, but it's just yet another thing. It's like someone could be dipping their toes in the leveraged way, right? Maybe hunting this area or this area. You see what I'm saying? And it's just another piece of the puzzle, exactly like you're saying. And here's the other important thing that we all miss, this. Every single stock you pull up, like Steve just said, Zoes, right? The pattern looks very reminiscent of exactly what we just have been talking about. Stock finds a bottom and starts going. I mean, I really like
those.
Yeah.
Let's just make this an actionable advice. Hey, everybody, watch $27.01 tomorrow. It could not get above $27. So if it can trade 27.01 tomorrow and have a little bit of steam behind it, have some options volume, have some 5-minute volume, have some good volume behind it, relative volume, any type of volume you want to measure, And if it can stay above that line for a good chunk of the day and, of course, close above that line, well, then you put your short seller hat on and you're like, well, I'm in trouble. This thing's making higher lows. It just took out a big level intraday that it couldn't take out today, 27. So there's an actionable one for you guys to mark up on your price alerts if you've got them. 2701, I think, could be very interesting if this thing can make it through.
Yeah, and I just put it in, and again, look at what you're trying to hunt here, right? And what I was saying kind of before, Steve, is, let me make sure. We tend to, when we get into the whole day trading mindset, we tend to not see the forest through the trees. And this is why I often zoom out far, because I'm trying to really think to myself, where is, what's going on, right? Because look at this, again, without any, Chapter 11 or anything like that. Look at this, Steve. Look at the waves coming in of volume just since 2015. This one, boom, 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 and they're still coming, right? But it's starting to creep now. And I'll tell you what. Again, having a 21% short float on a small stock like this, it's so dangerous for those guys. Again, I don't know what's going to happen, but those are all the hallmarks. If you're watching an MMA fight, and I love this, Steve, because you and I, we're fans. You've seen it, I think, a couple at my house. And Joe Rogan, who's the color commentator on the MMA, he'll say something like, oh, this guy just got smacked and he's smiling. And when you smile, like you're like, that doesn't hurt. He's like, yeah, that hurt. It's always the same thing. And this, these waves of volume, the way they've been coming in here, 1, 2, 3, 4, 5, 6, 7, 8. Like this is where, being short and a stock ripping, you can shake your head and be like, it didn't hurt, it hurts.
Well, I like those volume spikes right there as it broke out of that first level, and it continued. It wasn't just a one-day wonder volume. There was some nice volume, and of course, the price action has to follow the volume to confirm the volume, and it has been. So that's nice. Yeah.
So, okay, Steve, let's do this. We've been going for a little while. What I want to do now is how are we caught up on the questions? I want to make sure that they're answered, and then what I want to talk about is I want to take everybody from scratch. Maybe I'll do Yuri's 50-day SMA pullback or something like that.
I misunderstood his question. So he's asking about the alert window. What about the 50 SMA pullback?
Okay, let me show you how I would do that. I mean, first of all, that's one of those things that we have that canned. So you can go to New, Alert Window. Okay, so this is just a default one that comes up. So when you're in here, if you want to start and just look for something, I would suggest start from scratch, which means that when it's pointed to this is empty now. So then you go to the search tab, and I can type in 50 and 50-day moving average. And again, you can kind of, to me it doesn't matter up or down, but because you can do other things. So let's say you want a stock that's crossing the 50-day moving average, okay? But it's doing it as it's kind of, what I'm trying to say, it's coming up, but out of the lower end of its range. I'm just giving a hypothetical. So what you can do is you can go to and search the word position, one of my favorite searches. Okay, and in this position you can say, okay, so position in year range. In my mind, I want to picture this thing like Steve, like let's say we want to kind of something like this Bonanza Creek, quote-unquote, hypothetical, right? So you can say, well, maybe, what that means is it's been going up steadily, but it hasn't crossed the 40th percentile, but it's at least off the 20. You know what I'm saying? Mm-hmm. So these simple things, if you guys kind of understand what I'm saying, is I'm putting so the high and the low for the year, position in year, is 0 is the low and 100 is the high. If you want stocks that are close to the 50 2-week high, you would put like 99 in here. But notice what I'm doing. So I'm like saying between 20 and 40. It's very specific. I'm going to say for Yuri. And I'm going to hit OK. And what did I just do? Didn't I just... What? Steve, what did you do?
You didn't make any changes. So it should already be launched.
Why does my software hate me?
And there it is. It just doesn't have any columns.
Oh, you are so funny. Because I started from scratch. I didn't put any columns in there.
Exactly.
So,
also, I want to maybe try and refine a little bit more what Yuri might be asking. I think what we might need to do is go back to that search and use the 50-day moving average filter.
Okay,
that's fine. Because that's where we can identify where the price is in relation to the 50-day moving average filter.
Okay, so here's, when you type in 50, Steve, you get a bunch of things come up. So here's the alert, but here's the filter and the different ways that we can say. Like here I can say, for example, add filter, that the stock is, let's say, 10% above the 50-day SMA, but no more than 20.
Right.
So it's above it, but no more than 20. Then, again, I can still say the same thing that I was saying before, position, okay, and go to position in year range, and add the filter, and now I'm going to say 10 and 50. And I'm going to say for Yuri and columns, price, description.
That's where you start to get your columns of the ones you want to see.
Yeah.
Another thing you could do, Yuri, is you could actually take that filter, that 50-day moving average filter, and then put values that are very close to it, and then make the trade ideas alert either running down or new 5-minute low or new low, but it's making a new low, which is giving you the pullback that you're asking about, but it's alerting you at a level that we've identified of the 50-day moving average. So
okay, Steve, I found the issue. It's because I'm running, all of my alerts right now because of my version are a little blank. Because look, I went to this one and I just hit OK, and look. So let me see if I can load it from the cloud. There's so many different ways. Whenever you have issues, we have tons of different ways that we resolve them. Now, one of the things, obviously, I run an advanced window version, and now I'm going to avert. I'm going to load it. Hopefully, it will come in. See, my alerts aren't loading, Steve. Can you maybe cloud link me?
Cloud link you which one?
Well, let me see. I'm going to switch channels. Hold on a second.
That might be the way to go.
Yeah. See if anything will happen. My software hates me. Sorry, guys. See what when you guys don't have this, but it knew that I was doing a webinar, Steve.
Developer version can be buggy.
Yeah, see, like I have this thing called Dan's Trade Ideas Pro. So Yuri, I swear, we'll be more than happy to do that for you.
Yep. I sent him my email. Go ahead and just email me, Yuri. I'll set you up on that.
Yeah, let me see if I'm going to go to our active trading channel. See if there's an alert window in there that pops up. See, that'll tell you that it's by the way, Steve, notice that it's like only during a webinar that I'm doing, like, if Jamie was here, it would be impossible for this to be happening.
Yeah.
This is where the powers that be, and see, because of our multi-strategy, which consists of multiple of our windows, the same thing happens. Okay, so let's do this. Let's just continue to work through the examples that we were doing. One of the other things that I can do is I can kind of talk a little bit about what happened with the AI today, because it was very, very interesting. And I'm going to do it by highlighting the trades by entry. So today was definitely a day, in my opinion, Steve, where it was early bird gets the worm. Okay? Because this was risk off, this was risk on, and in the first 40 minutes, you know, we got you into Microsoft, which was one of the best moves for this kind of stock. And this is, again, what makes me feel very, very bullish about just what's going on in the market. When you see a thing like Microsoft run, you know, that just is very positive. Here's another one. There was a great one for on the support play. This one was one of my better trades today. I traded this one at 400 shares because, again, I bought it right where at this level I was only negative like for one candle. And look what happens. It never saw that price again. Those are the kind of trades that, you know, like when you're lucky to be in them, it feels like, I know what I'm doing. And this one also on support. So this is the other thing that to me, Steve, the best thing that I can communicate as a guest lecturer, guest office hours voice is that too often we all learn one thing, which is buying breakouts. But a lot of times, professionals like Warren Buffett, and even in the longer sense, you know, the CWEI type of sense, where, you know, you let it come to you. You know, buying the breakout is this. And at some point, they're not always going to work. Although these, I mean, this one right here looked beautiful. There's just no way you could have known that was the end. I mean, this thing too, like, look, it hit that high again and consolidated for a long time. But it was not to be at that point. And that's why, you know, we specifically make the AI look for not only things that just are simply breaking out. Breaking out is the Joe Blogs answer. In other words, it's great when it happens, and all of us, myself included, we all want to be in them, because that means you're right, there's momentum behind you, golf clap. But you can get some of the best, you know, trades in these types of scenarios. So here's what happened. Somebody loved this stock, they bought it here, and I've been this guy many times. But it pulled back so hard that you're out. And that's what caused this candle right here. You're like, this thing's going to go back to 23. And then, boom. That's supply and demand and efficiency, and why I urge you to kind of, you know, lift the veil of A, only being a day trader, thinking that that's the only way to do it, and B, only buying breakouts because they look good. Remember, your eyes have no idea what's going on the chart. That's why we are huge fans of removing more things, removing the extemporaneous stuff, the fib lines, the pitchforks, the tea leaves, the Elliott waves. Who the hell is Elliott, and why does he have a wave?
Ichimuro cloud.
Ichimuro.
Cloud. No, it's analysis paralysis is what that leads to.
Can golf teachers play golf? Hell no. That's why he doesn't have any.
Yeah.
Like, if those guys knew what they were doing, they'd be on tour. All right. Scott, would you like to finish up for us? Are there any more questions? Please tell me if I've been terrible compared to Jamie. I feel like I'm so entertaining.
Looks like the questions are pretty well caught up with. If anyone has more, we have contact information for you to email to.
Okay.
Yeah. So as a way to thank you for attending our webinars, we provide a product code that gives a nice discount. So the current code for the office hours webinars, Trade Smart. It's all caps. I think Dan will pull that up Slide up moment. There it is. Slides up. So when you go to trade-ideas.com/price and use that code, remember to use all caps. It takes 15% off your first month or year of premium, or you can save 10% off your first month or year of standard. Now, the important thing to remember is whether you're picking up standard or premium, you get a full year of one-on-one. A full hour of one-on-one training with Steve or Andy or Jamie, and first thing you want to do after you subscribe is go to support, click on training, and there's a handy little calendar there for you to select the best available time and date for yourself. Of course, the premium version is the one that has access to Holly and all the other goodies like unlimited backtesting with the odds maker, shareable price alerts, RBI, GBI advanced windows. But whether you pick up premium or standard, you still get all the great real-time data, and it covers your exchange fees. You get the charting, and you get to play along with Barry in our trading room. We have a really active community in our trading room, live chat, so tune into that every day. You can also download a handout. I put a handout in the handouts panel. If you go to webinar interface, just locate where it says handouts, click on the little plus next to it, and you can download that. It includes a reminder about this code that's good today, and also all of our contact information that's important. So if you have any questions, email info@trade-ideas.com. You can follow Dan at TradeIdeas1 on Twitter. You can follow us on Facebook, facebook.com/TradeIdeasPro. Steve Gomez is Today Trader on Twitter, and Jamie, who's absent today, is QuantBot on Twitter. Phone number is a good place to call if you have a subscription or billing question during normal business hours on the West Coast. However, if you do have a technical question, you're going to want to email info@trade-ideas.com so that gets routed to our appropriate team member by our help desk software. Or you can reach out directly to Dan at trade-ideas.com or Steve at trade-ideas.com. And of course, Jamie's jhodge at. Thanks, everyone. Thanks, Dan. Thanks, Steve. We'll get the recording up shortly.
All right. Thank you. I'll see you all.
Yeah, and remember to keep an eye out for your invitations to tomorrow's Trade of the Week webinar with Keith Kern. We have a special guest. So if you're on the Trade of the Week list, you should already have an invite and be getting another one or a reminder if you haven't already signed up right around now. Thanks.
Yeah, we have a guest guy coming in tomorrow, and he's the real deal. He's a good guy, and so looking forward to spending half my webinar time and sharing it with him tomorrow. So we'll, again, have some new, fresh content for you tomorrow night.
Yeah. Thanks, Steve. Thanks, Dan. All right. Bye, guys.